Christopher Smart, Barings Chief Global Strategist and head of the Barings Investment Institute, joining us now. He served as special assistant to the president at the National Economic Council during the Obama administration. Christopher, good morning.
Good morning.
Treasury Secretary Yellen very keen on making sure that the stimulus story continues and that it's delivered in size. We are clearly seeing an expectation that the U.S. economy is going to be moving forwards at a fairly decent clip as the year progresses. We can see that being priced into the bond market. What does this mean for assets? Are you repositioning as a result of what is happening here?
Well, I think in the near term, you have to be more optimistic that this is a year where we're going to see both the effects of the stimulus, the effects of the vaccines coming through, and you're seeing it, I think the market not reacting so much to the stimulus prospects, although that's clearly in the price, but really reacting to the data. Last week's retail sales number was a blowout number, really reflecting the fact that the stimulus passed in December is having an effect. You had a good earnings season, and I think that is really going to continue to flow through. So I don't see any reason to stand in the way of what is a good story this year. There are obviously some longer-term issues about next year, but when you have people talking about 6%, 7% economic growth in 2021, that has to be pretty good for risk assets.
Yeah, I think I've seen 3 economist upgrades so far just in the last few days. Christopher, question though, will Joe Manchin stand in front of this? The talk over the weekend was that if he's going to stand against Biden's nominee for director of the Office of Management and Budget, which we kind of knew that he was, is that make him a stick in the mud when it comes to stimulus?
Well, I think there's sort of a competition in Congress now for being, or the Senate for being a stick in the mud, because that gives you some leverage. And I think Joe Manchin is using that. You've seen, other more centrist Republicans, whether it is Lisa Murkowski or Susan Collins or Mitt Romney or others, clearing their throat and saying, well, maybe my vote might be available on this. So there's a lot of movement around the center. I think the biggest issues right now are not so much Joe Manchin, but making sure that the Senate parliamentarian clears the $15 minimum wage increase as being legal within the framework of a reconciliation process. And I think that that will go through. Maybe we'll see a smaller package, but I think for the market's perspective, it's going to be on the higher side right now. That's I think the current betting.
Christopher, if we continue to see the data coming out of the vaccine rollouts and also the lower virus numbers continuing, clearly this is having a major impact on the bond market right now. How high do you think yields could get? And at what point does this start having a meaningful impact on equity markets? We're seeing it in tech a little bit today. Is there more of that to follow?
Well, that, of course, is the single most important question the market is grappling with right now. If you have yields drifting higher, which it looks like they will, even past 1.5%, and that is against the backdrop of an economy growing at 5, 6, 7%. Now, it seems to me the equity markets aren't going to be too troubled by that, particularly if you have a Fed that continues to reiterate that it is not going to be raising rates anytime soon. So I think that would be our base case. Knowing exactly what the tipping point is, at what if it gets up above 2%, maybe people start wondering. But I think the Fed is going to make sure that things don't go too far too fast in that regard.
Well, will Congress do the same thing? Because now we're talking about tax cuts, and the CBO looked at the stimulus. They said it's actually a little bit more than 1.9 trillion. Janet Yellen earlier today talking about that financial transaction tax, maybe a wealth tax, although that gets complicated. Like, we're already starting to talk about those things that would be regressive, no?
Yes, indeed, but Congress is a giant ship, and once momentum gets going, it's very hard for it to slow down or course correct. I think the talk of the tax increases really are going to be much more back-end loaded going into next year or the following years. The talk of the spending will continue to be very strong this year. I think, again, we'll have to see what the data looks like. We'll have to see what bond yields look like or inflation expectations look like sort of going on into the spring and summer before we do that. But I think there is a lot of momentum if President Biden can get through this first stimulus package, to come back again with a much more ambitious program that includes tax increases, infrastructure, and the like. They're talking about a number around $3 trillion. How that plays in terms of tax increases versus spending, timing on all of that, I think those are big questions that remain to be worked out. But Congress is not nearly as nimble as the Fed might be in some of these decisions.